Hi, I'm Linda Bolton-Weiser, Managing Director and Research Analyst at Water Tower Research. We're initiating coverage of Estee Lauder, ticker EL, and I'd like to briefly share some of the key points discussed in our initiation report. Most people are familiar with Estee Lauder, a global leader in prestige or high-end beauty, ranking number 2 in the world after L'Oreal. But here's what most don't realize about this company. It has outsized exposure to some of the highest growth areas in beauty, including skincare, China, and travel retail. It has 24 well-known brands, including Clinique, Bobbi Brown, Tom Ford, MAC, The Ordinary, and Jo Malone. Let's start with where the story is now. We have a stock that's lost more than half its value and a company that's posted 3 straight years of declining sales. The culprits? China demand cooling off, a crackdown on gray market channels in China, excess travel retail inventory, and share losses in the US and other important markets. On January 1st, 2025, company insider Stéphane de la Faverie became CEO. He's a 25-year beauty veteran who had already run the flagship Estee Lauder brand. He showed a sense of urgency from the very beginning and wasted no time in launching his Beauty Reimagined turnaround strategy. It has 5 action plan priorities, all boiling down to getting closer to the consumer, innovating faster, spending smarter on marketing, cutting costs aggressively, and simplifying the bloated organization. The company finally decided to sell on the Amazon premium beauty platform, which had always been shunned by previous management. Early success is showing up in the numbers. When they report year-end results in August, we expect 3% organic sales growth in FY26, the first year with positive growth since FY22. Operating margin for the year should come in at about 11%, up a whopping 3 percentage points from last year's trough of 8%, partly due to the cost-cutting program. Management had the confidence to already give FY27 guidance back in early May. Next year, sales growth is expected to accelerate with more operating margin expansion as the company continues to march toward historical levels in the mid-teens. It's not all smooth sailing in this turnaround, however. Disruptions from the Middle East war are expected to shave 6 cents from EPS in the June quarter. Now let's talk valuation. The stock historically was often the most expensive in the household and personal care sector, but now it's trading at 10.6 times calendar 27 EBITDA, a 13% discount to the peer group average. That's a quick take. There's much more in the full report, which you can find on our website at www.watertowerresearch.com. Our content and events are complimentary to all investors. Thanks for listening.